It's about that time of day again. My name is Joseph. It's Wednesday evening, March the 22nd, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish with two important channels on the chart this evening, but one of those channels is telling us to wait for proof of either more strength or a deep pullback for tomorrow's session. The S&P is bullish and trying to determine if it wants to use a channel or a wedge, which definitely tells me ready for two different strategies tomorrow. Gold is bullish and trying to complete a triple measured move tomorrow, and we have two important clues telling us to be patient and wait for a deep pullback before buying more on Thursday. The euro's bearish, trying to retest today's low, but two levels of support and a very interesting situation of market psychology tells us to look for a correction before we get there. The FDAX is bullish and trying to return back to the round number at 12,000 tomorrow, but a trading range on the chart is telling us that we need to avoid buying high and be looking for traps tomorrow. Boy, we have some incredible charts to look at tonight. 5 different situations that all have great market psychology lessons to teach us going to Thursday's session. And of course, as always, I have a great video for you guys tonight with plenty of reliable trading opportunities setting up for Thursday's session. Before we jump in though, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me on the blog here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, always posting important links and updates throughout the day on my social media channels. Download those charts. Follow that link below the video tonight to download my charts and have them on your computer for tomorrow. And please don't forget to grab your free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And please don't forget, if you're brand new here to the SOT community, we get a great frequently asked questions. You can learn the who, what, where, when, and why. And I'm always here to answer all your questions along the way. Hit me up on the live support tool on the right-hand side of the website. Man, it's been a great week here so far. It's getting a little bit choppy out there in some of these markets as we go into this fourth week of the month of March. We're starting to keep an eye on the end of the month here. We got some prior weeks, some prior month levels we'll talk about on tonight's newsletter. Before we jump into those charts, though, let's make sure we look at the economic news here for tomorrow. Tomorrow's the 23rd day of March, Thursday here. Yeah, there's actually 5 weeks in this month of March. Gotta love this month, right? It can be a very transitional month. We're going into the end of the first quarter, obviously, and so a lot of planning goes on, right, for the rest of the year as we get towards the end of the month of March. We, of course, have, right, summertime beginning in Europe this weekend, so looking forward to moving their clocks ahead an hour, right, catching up to us. And so, of course, again, got some changes happening. Weather changes, business climates change, right? And of course, you can feel it in the markets as well. Boy, oh boy, got a busy day tomorrow. Not a lot of major news. A lot of stuff on the chart, as you can see. A lot of stuff, as you can see, listed on this calendar. But for the most part, though, tomorrow, again, there's no major news coming out tonight. So tomorrow, it's pretty much the retail sales at 5:30, the jobless claims at 8:30, and I think the big news tomorrow morning will be those new home sales at 10 a.m. Don't worry about Yellen tomorrow morning. Get Yellen at 8:45. She's not going to move the markets too much tomorrow. This is not a testimony, right? This is just she's doing some keynote speech in New York tomorrow morning. So I wouldn't put too much concern in the 8:45. There might be a bit of a pause, just to see if she, comes out there and says something crazy. But I doubt you're going to see many people actually worrying about her tomorrow. I think the biggest news tomorrow will be that new home sales at 10 a.m. We're definitely looking at that as a lagging indicator, right, of the overall health of the economy here in the U.S. So keep an eye on that. And of course, outside of that, nothing else really to worry about here. We got a full day on Friday. We got a bunch of news on Friday, so I would expect a full day of trading tomorrow. Let's jump into those charts here. Looking at crude, we'll go crude, S&P, gold, euro, and of course we can't forget about the FDAX here tonight. Crude is bullish and trying to finish a double up and possibly a triple measured move tomorrow. But the bulls just retested the high, telling us that we're likely going to see profit taking. So our plan is to look for a trap down in the battle zone to avoid buying high tomorrow. But we have two channels on this chart. excuse me, but the smaller channel is the most important. The bulls took control of the market around 11:30 a.m. Eastern time this morning. They got a classic trap low after that change in trend, and they got price shooting right back up to retest those highs. At this point, now we're back to the highs. We're at the daily highs now, and we need to see proof that they want to take this price higher, or we got to wait for a deep pullback to avoid buying the high. Like I said earlier, there are two channels on the chart right now. There's this channel here. This is the larger channel, right? That larger channel you can see here. We're getting some decent rotation. We're getting decent rotation, right? Let's try to buy the low of that channel. I think right now that channel is more accurately described as a rising support trend line, right? So use that as a rising support trend line. What I really want to draw your attention to is the smaller channel. This smaller channel, as you can see, has a lot better rotation. Notice how the rotation is pretty much perfect. Low to high, high to low, low to high, high to low, right? And then back down. This is a really important example of why I always tell you, right, the smaller stuff, the more narrower channels, the narrower ranges, those are always going to be more important than the wider ones. Now, it just so happens to be that the smaller ones are also more difficult to find. You really have to have kind of a skilled eye in looking for them. I teach a real systematic way of drawing trend lines into channels in our intermediate class. So rest assured, you're gonna learn all this when you come out and join me as a student, at least in our intermediate classes you will. Then of course we talk about how to trade those levels, right, in our advanced classes. Now with that said, I think the most important clue is what happened right there. That's where the bulls finally took control today. Today was a situation on crude where we knew there wasn't a lot of space to the downside, and with that inventory number lingering at 1030, it made it very difficult for the bears to really get anything going. It was really a great example of just lack of options for the bears today, which ultimately led to this price going higher. We did a lot of work on that today in our trade room with our clients in the trade room this morning. Most important thing though is right here at 1130 where the market turns bullish. We make a new higher high, we hold the pullback, and we jump up. Now, we're going to see another example of this a few times later on this newsletter tonight, but this is a great example of what happens. It's a classic scenario where, in this case, the bears lose control, the bulls take control, but then they find themselves in a situation where now they have to buy high, right? See where I'm kind of marking this up with these kind of purple arrows here? When we see a new higher high here, the buyers now have taken control. But the problem now is the buyers don't want to buy in an overbought scenario. So what do? They look to buy low. In comes a trap low. There's your trap low. That is the buying opportunity of the day for those bulls, right? Trying to get in back here, you're trying to pick a bottom, right? And picking bottoms are always, right? They always end up, they have much lower reliability, as I always preach here in this newsletter, right? Much better to find the reliable trend reversal and go with that trend. So where I've got it circled right now, right around 12:30 this morning, 12:15, right? The buyers now have a beautiful chance, right, to buy low. Trend changes. They don't want to buy high. What do? They want to buy low, right? So trap low. Beautiful example. Now, you want some proof that that's what they were looking for? Look at the follow through, right? That is exactly right. The follow through tells you the buyers were ready to buy that trap, right? Because again, right, price changed hands and they decided to buy low rather than buying high. Now, where's their objective at this point, right? The buyers buy low. Where's the objective? The objective is to go back up and retest the high. They get the retest of the high. Now, look at that example right there. What does that tell you? If I was to ask you, how would you describe the retest of the high? You know, I can't see the chart. My eyes are closed. I can't see the chart right now. How would you describe that high to me? I would say, boy, real strong move to the high, but it doesn't appear there was much follow through. Right? They close right at the high. The next candle goes up, tries to keep going, and then comes right back down, right? You get that big wick right at the top of that candle. So the first big clue is they go up and retest the high. They got their objective. One big clue. Second big clue, we didn't see this thing pound through the highs, did we? No, we didn't, right? Second clue. Right now, the third clue, this is where now we put this all together here. What didn't happen was we didn't pull back to that reversal line and we didn't pull back to the moving average. These are always really, really easy areas. I love love that reversal line at 93. What I also love is the fact that when they pulled back, they didn't get to 93, did they? They didn't even get to the moving average. So this tells me that there's a big, strong move up. Clue 1, retest the high. No real strong blow through the high. Clue 2, clue 3, there are some levels there that are begging right now, right, to be used by those buyers. In my opinion, the buyers have control, but they're right at the objective, right? Buyers have control. Where's their objective? The high of day. Where are we? We're at the high of day. I don't want to buy into the high of day, right? I don't want to buy at the objective. So now we want to stay patient. Right? Now think back in time when the buyers were in a position where they didn't want to buy high. What they do? They look for a trap, right? To what? To buy low. Same thing, right? This is almost identical situation, right? Looking for a trap low and then back up. Why? To buy low. Big run back to the high of day, beautiful move. But now anybody who got in back here, what are they doing? Taking profit, right? You get back in that, you get in that trap low, you're taking profit that high. Now, put yourself in the shoes of the professionals. Professionals are the ones that provide liquidity. They're the ones that really move these markets. Professionals bought that trap low. If you were in that move, you would take your profit that high of day as well, right? That's the objective. Now, with that said, where would professionals now be wanting to get in again? Well, they wouldn't want to buy here. Why would you buy here? You know, you would rather have a lower price, right? Absolutely. So you'd want to be buying at a lower price. So that's the first option here, right? Buy down in that battle zone. But Joe, it's a bull market. What if it keeps going higher? I'm glad you asked that. I'm glad you asked that. Well, of course, now we have some areas of resistance overhead, right? That double up target at 39 and the measured move. This measured move is a little bit tricky, as you can see. 1, 2, we don't really get it. We get it here, and then we pull back, so you're going to draw it from there, right? This is another example of some of the little techniques that I teach in our intermediate classes, right? Intermediate class is all about all the analysis you see me using here on the nightly newsletter, right? And then we use the analysis, right, in the trade room. So with that said, this is going to be our no trade zone. Right now, we have to assume the initial objective is to get that 39. So as this price goes higher, assuming it goes higher here without pulling back, now you want to go into that mindset of strong run up. What do? Look for a little trading range here and try to what? Buy low. Okay, this is that classic mindset. We saw a great example of this in the euro last night, right? I hope you guys made some money in the euro for my guidance last night in the newsletter, right? We'll talk about that in a moment. But that's what you want to start thinking, okay, when you're going into this, you know, this kind of no trade zone up here, right? You want to start thinking, we're high, I don't want to buy high, so I want to buy low, trap low, right? Trap low, pull back here for a failure, right? Just don't chase after it, right? Don't chase after it. So we run up, trap, buy low, we run up. Don't be surprised if we start seeing a range up there, pull back, failure, back up, etc., etc. One thing you can count on, though, is that if this market does run higher, it will give you at some point a nice, deep, juicy pullback. Okay, trust me, it will, right? Your job is to not run out of bullets trying to buy high before it happens. Okay, that's your job tomorrow. Look for that trap, right? Or basically looking for traps whether it goes up or whether it goes down. Be very careful being a buyer right here for right now. Don't forget, we'll be in the trade room tomorrow, 8 o'clock Eastern time. We'll be trading that strategy. How about some S&P? S&P is bullish and trading in the middle of a channel and the lows of a potential bull wedge this evening. The bulls have control in a rather weak trend, which tells us to avoid buying into the highs and focus on buying the deep pullbacks to the lows. We also want to keep an eye on this rising support trend line, which may develop into a wedge tomorrow. If price fails to rotate back down to the low of that channel, that wider channel, then we know the bulls are using this wedge. But we need confirmation first, so stay patient. The goal of the buyers is to buy the low of this channel. And if it turns into a wedge, then we can look for traps below the prior swings of this wedge. It's also important to remember that yesterday's move was the biggest down day of 2017. And this sluggish bull channel is certain to be viewed as a bear flag on a larger time frame, which is another reason to avoid buying into the highs because we expect there to be sellers waiting up there tomorrow. I think the most important thing right now, there are 3 real big components on this chart right now. First of all, we have this bull channel. The bull channel, of course, is a very flat almost sideways channel. We'll see another one of these on gold in a moment. Gold's almost even better example of this, but this is a really good example of one of those times where I remind you that the best types of channels to trade, or should I say the easiest ones to trade, are going to be those channels that are relatively narrow. They are